What if I told you the bank doesn't see your name first? It sees your value. Every time you swipe your card, apply for a loan, or walk into a branch, you're being evaluated, not as a person, but as an opportunity. Two customers can walk through the same door, ask the same question, and receive completely different treatment, not because one is smarter, not because one works harder, but because the system believes one customer is worth more than the other. The strange part, most people never notice it, because the rules don't change overnight, they change quietly, one financial milestone at a time. Today, we're going to uncover the invisible ladder almost every customer climbs, from barely surviving to becoming someone financial institutions compete to keep. Because once you understand how the system really works, you'll realize something surprising. Money doesn't just change your bank account, it changes how the financial world sees you. The first time a bank learns something about you, it isn't when you walk into a branch, it isn't when you shake someone's hand, it isn't even when you open an account. It begins with a pattern, a paycheck that arrives every month, bills paid on time, money that stays instead of disappearing overnight. To you, these are ordinary habits. To the system, they're signals. Every transaction adds another piece to a picture you'll never see. One purchase means almost nothing. One late payment doesn't define you, but hundreds of small decisions made over months begin telling a story, not about who you are, but about how predictable your financial life is. And in banking, the predictability is valuable. Imagine two customers, both earn about the same salary, both are the same age, both apply for the same loan. On paper, they look almost identical, but one of them saves a little every month, the other spends almost every dollar they earn. Neither choice makes someone a better person. Yet to the bank, those habits represent two completely different futures. One looks stable, the other looks uncertain. That's why financial decisions often feel unfair. You're not being judged for a single moment, you're being measured by thousands of tiny moments, collected over time. The truth is, banks don't predict the future, they estimate probabilities. And the more consistent your habits become, the more confidence the system has in what you'll do next. That's the invisible foundation of every financial relationship. Long before wealth changes your life, consistency changes how the system sees you. And that single shift that opens doors most people don't even realize were closed. Most people believe money is expensive, but uncertainty is even more expensive. Imagine two neighbors. They earn almost the same income. They shop at the same grocery store, drive similar cars, and pay nearly identical rent. From the outside, their lives look almost identical, but there's one difference no one can see. The first person has a small emergency fund, the second doesn't. Then life does what life always does. A tire blows out on the highway. The repair costs more than expected. For the first person, it's an inconvenience. For the second, it's a crisis. One unexpected bill becomes two. A credit card balance grows. Interest starts accumulating. Next month becomes harder than the last. This is how financial pressure usually begins. Not with one catastrophic mistake, but with a chain reaction. One decision creates another. One setback creates the next. The numbers tell a story. But the story isn't really about money. It's about options. People with options make decisions. People without options make compromises. And those compromises often become expensive. Working extra hours instead of learning a new skill, taking the first loan instead of the best one, buying the cheapest solution, only to replace it a few months later. The financial world rewards flexibility, and flexibility almost always comes from preparation. That's why building wealth isn't only about earning more. It's about creating enough space to make better decisions, because every dollar you don't desperately need today gives your future self another choice tomorrow. And in finance, choice is one of the most valuable assets you can own. The surprising part is, banks understand this better than almost anyone. They aren't just looking at how much money you have. They're looking at how resilient your financial life appears. Can you absorb a setback? Can you recover from a surprise? Can your finances keep moving even when life doesn't go according to plan? Those answers quietly influence far more than most people realize. Because long before wealth earns trust, like resilience does, most people think wealth is built by earning more, but that's only the beginning. The real difference appears when money starts changing the way you make decisions. Imagine receiving a bonus at work. A few years ago, that money would have disappeared almost immediately. Rent, bills, debt. There was always somewhere it needed to go. Now, something feels different for the first time. You have a choice. You don't have to spend it. You can invest it. And that single decision creates a chain reaction most people never notice. Money that isn't spent has a chance to grow. A small investment earns a return. That return earns another return. Months become years. Years become decades. The process looks painfully slow. And until one day it doesn't. People often assume wealthy individuals know secret investment strategies. Most don't. What they understand is something far more powerful: time. Time allows mistakes to recover. Time allows investments to compound. Time turns ordinary returns into extraordinary outcomes. That's why two people can invest the same amount of money, yet end up with completely different futures. The difference isn't intelligence, it's how early they started and how consistently they stayed invested. Financial institutions understand this better than anyone. They're not only interested in how much you own today, they're interested in what you'll own 10 years from now. Because a customer whose wealth is growing will eventually need larger investments, larger loans, more sophisticated financial services. In other words, as your assets grow, like so does your value. That's why the conversation begins to change. You stop hearing about basic accounts. Instead, you hear words like diversification, long-term planning, portfolio reviews, tax efficiency. The products aren't really the point. The relationship is, because the longer your financial journey lasts, the more valuable that relationship becomes. And that's the quiet secret behind compounding. It doesn't only multiply money, it multiplies opportunities. Every good financial decision makes the next one a little easier. Every year of patience creates more freedom than the year before. Eventually, like you stop asking, "Sue, how much did I make this month?" and start asking a far more important question. How hard is my money working? Even while I'm asleep, there comes a moment and when the biggest difference between two people isn't how much they earn, it's how they spend their time. Think about the average workday. 8 hours at the office, an hour in traffic, a few more answering emails after dinner. By the end of the week, almost every hour has already been promised to someone else. Now imagine something different. Your investments begin producing enough income to cover a few of your monthly expenses, not all of them, just enough to create breathing room. Suddenly, you don't have to accept every opportunity that comes your way. You can wait for the right one. You don't have to stay in a job you hate simply because the next paycheck is only 2 weeks away. You can think, plan, choose. That freedom is difficult to measure, but it's one of the most valuable things money can buy. People often believe wealth is about expensive houses, luxury cars, or first-class flights. Those things are visible. Freedom isn't. Freedom looks like saying no without worrying about the consequences. Freedom looks like taking a month to learn a new skill. Freedom looks like spending an afternoon with your family without constantly checking your phone for work emails. The financial world understands this better than most people. When your assets begin growing consistently, banks don't just see larger balances, they see someone whose future is becoming more predictable, someone who is planning instead of reacting, someone who thinks in years, not weeks. That's why the conversation changes again. You're no longer asked about your next purchase. You're asked about your long-term goals, retirement, business ownership, real estate, generational wealth. The questions become bigger because your timeline becomes longer. And the longer your timeline, the more powerful every financial decision becomes. Here's the paradox. The wealthiest people rarely chase every opportunity. They ignore most of them because they know attention is limited, time is limited, energy is limited. The goal isn't to do more, it's to choose better. That's when you realize something unexpected. Real wealth isn't measured by the size of your bank account. It's measured by how much control you have over your own time. And once you gain control of your time, you're no longer working only to earn money. You're using money to design the life you actually want. At the beginning of this video, we asked a simple question: why do some people seem to play by completely different financial rules? The answer isn't that they're smarter or luckier or somehow born with access the rest of us don't have. The difference begins much earlier. It begins with habits, small decisions repeated over and over again. Every dollar you save, every unnecessary debt you avoid, every investment you make, every moment you choose the future over instant gratification. On its own, none of those decisions seems life-changing. Together, they shape the direction of an entire lifetime. The financial world isn't transformed by one perfect decision. It's transformed by thousands of ordinary ones. That's why wealth often appears invisible, until one day it suddenly isn't. People see the result. They rarely see the years of discipline that came before it. The truth is, money is a powerful tool, but it also acts like a mirror. It reveals your priorities, your patience, your ability to think beyond today. And perhaps the most important lesson of all, financial freedom isn't about proving your success to other people. It's about creating a life where your decisions are guided by purpose instead of pressure, where opportunities are chosen not desperately accepted, where time belongs to you, not to the next paycheck, no matter where you are today, whether you're just beginning your financial journey or already building lasting wealth. Remember this: every fortune started with a single decision, not to become rich overnight, but to become a little better, a little wiser, and a little more prepared than the day before. Because the future isn't built in one extraordinary moment, it's built quietly, one choice, one habit, one day at a time. If this video changed the way you think about money, take a moment to subscribe and join us for more stories that reveal the hidden rules shaping our financial world. Until next time, keep learning, keep investing in yourself, and remember, the greatest investment you'll ever make is the person making every financial decision. That's you.